How to trade in a way that assures consistent profitability. In this video, I will show what influenced me the most in terms of deciding on how I should trade. Surprisingly, this critical influence came from one of Nick Sean's videos, entitled, Why I've Changed My Trading Strategy Over and Over. Link in the description. So yes, the foundational realization and understanding of how I should trade came to me from a free source of trading instructions, rather than from all of the stuff that I've paid for. What follows now is a short clip from the above-mentioned video. After it comes to an end, I will describe in detail the critical influencing factors derived from the following clip.
Whatever reason, I just thought it would go down. So I structured the trade by putting an entry there, a stop way above the zone and the highs and current price, and then a target at just a 1-to-1 risk-reward ratio. The 1-to-1 risk-reward ratio is just to structure the trade, okay? It's not like I've never just stuck to the 1-to-1 risk-reward ratio and let it hit stop and let it hit target. In the beginning, it's great to do that because it shows you that you're only going to have a 50% win rate. But the idea is that once you start getting experience and you get a little discretion and stuff, you can then start adding to the trades that win. So you make more whenever you do win a 1-to-1 risk-reward ratio. And then you start getting out of trades early and not adding to them if you're going to lose or if it starts losing. So that way you keep the losses a little bit smaller and the profits a little bit bigger. That's how you get profitable. A 1-to-1 risk-reward ratio is only profitable by holding it to TP or stop loss if you have above a 55% win rate to account for commissions and fees. And you can do that too. There's people who have 60, 65, 70% win rate. That you can do that. Works perfectly fine. It just works even better if you manage it dynamically and don't hold it all the way to the stop loss. The stop loss is there for like an emergency to give you room to exercise your discretion without just getting stopped out over and over and over.
The critical influencing factors derived from the presented clip are as follows. Number 1. Nick said that if you structure a trade as shown in the clip presented above, and don't manage it, just let the price action hit either the stop or the target, you should end up with the break-even results over the large sample of trades. Number 2. I decided to statistically verify the validity of Nick's assertion about the break-even results over the large sample of trades structured as shown in the clip. Number 3. To make the results as meaningful as possible, I decided to enter my trades at the points at which I had a neutral bias as to which way the price action would move, meaning that my trades would have no bias-derived edge. Number 4. My risk-reward ratio was always 1-to-1, and my stops and targets were 4 ATR, the whole width of the Keltner channel, away from the entry points. Number 5, my results along a sample of 200 SPX 500 on 5-minute timeframe trades were as follows. After 50 trades, I had 25 winners and 25 losers, a perfect break-even. After 100 trades, I had 51 winners and 49 losers, still almost perfect break-even. After 150 trades, I had 74 winners and 76 losers, still almost perfect break-even. After 200 trades, I had 108 winners and 92 losers, still almost perfect break-even considering the size of the sample. The results obtained from the study of the above described setup over a large sample of trades were obvious and very pleasantly surprising. I was overjoyed with them because I saw how I could trade in a way in which it was not only impossible to lose but also with proper trade management success was statistically assured. Let me explain. If I trade as I described above but add trade management, as Nick described in the above presented clip, to the process, plus enter the trades only under high pro-win bias, I would have a statistically sure winning strategy. I'm not sure if you can fully appreciate the weight of what I've just said. I basically said that I discovered the way of trading which assures consistent statistical winning. Now, why would I not end my day trading for a living lessons here and continue on writing? You see, trading as I described here requires application of the significantly stretched stop, in my case, 4 ATR. And since the setup has a risk-reward ratio 1-on-1, the distance from the entry point to the target is also quite large. This means that frequently, along the distance from the entry point to the target, there will be some support resistance levels which will throw the trade off the rails. These undesirable bounces happening against the necessary winning direction are psychologically very unpleasant to go through, and in some cases, they will collapse otherwise winning trade. The solution to this would be to narrow the whole one-on-one trading bracket to the point at which there is only a minimal chance of retracement along the trade. And this means scalping. I am infinitely more interested in scalping, where there is no issue of retracement along a trade, than trading the retraceable price action patterns between my entries and targets. And this is why I am presently experimenting with scalping to see if I could profitably scalp the market in the same way that I have already proven to myself as the way leading to assured profitability. My scalping study is currently in process, and I will show the results when I have gone over the statistically meaningful sample of trades.